JJ the CPA here. Hope you're doing well. So the IRS has released some statistics, and I'm going to tell you this right now. If you're paying attention to those, well, I'm going to be a little surprised because if you are in the midst of tax season, you don't have time to look at statistics. But the reason it would be good for you to listen in is that as this gets reported by the press, as we have those that put together dramatic emails, let's say on YouTube, that pretend that they know what they're talking about and they really don't, right? But when we're talking about these statistics, they can be, if we're only looking at a headline, quite misleading, if you will. And with that being said, what is it that I'm talking about? Well, the IRS has come out and released just statistics that more tax returns have been e-filed at this time compared to the same time in the prior year. Now, many have said, well, they've brought on new IRS agents, and so that must be the reason. And I would say to that, well, you probably aren't really that involved in the tax world, or quite frankly, you're just making it up as you go. The other thing that we've seen in the statistics is that the refunds are down, and by 11%. And so again, if you're just reading the statistics and you're trying to put together something that is sensational, well, then you're going to probably just go by what you think that means without really having a sense of reality. Now, if I'm a professional like you working in the tax world, I don't really know if I got time to pay attention to these statistics. But again, with it being in the headlines, and this might be something that your clients are seeing, or maybe you're even curious of. So what is then the correlation between more returns being e-filed compared to the increase that we know the IRS has received, not only in funding, but with almost 4,000 new hires coming in to the IRS at the end of 2022? What would that correlation be? Well, of course, I'm giving you my opinion, but after 30 years of experience, what I would say is this. If more returns have been e-filed this time in this year compared to the same time in the prior year, I don't think that has much to do with more IRS agents working at the IRS. Let me tell you why. Because the IRS has a very sophisticated, very impressive computer system, if you will. Their artificial intelligence that's built into their software is quite remarkable in terms of everything that it keeps up with. So those that basically are putting together that software, maintaining it, updating it, that was all done last year. That was all done at the end of last year to really roll out what we're now experiencing. So a lot of that would go to really hats off to the technical team at the IRS. See, where the IRS brought in more agents, these 4,000, was really in the area of customer service. Now, what I do love and applaud the IRS on is that what I'm hearing is that there is way less wait time when you call the IRS in terms of talking to a live agent. Also, the IRS has announced twice now, and very recently the second time, that they now are available in a number of locations around the U.S. to do face-to-face help, if you will, with the public and an IRS agent on tax issues, and providing Saturday hours nonetheless for this opportunity to get their help. So in the areas of also then processing maybe tax returns that are ones that have been filed in the past, maybe amended returns or paper filed returns, or maybe things related to the employee retention tax credit, I wouldn't be surprised if a lot of these new agents are helping in that regard. But when we are talking about more tax returns being e-filed, I think that also has a lot to do with the fact that I would say most are feeling much more comfortable getting out and about. I think also that there are some national chains that provide tax services that they are now providing an expansion of those services, in that they are available online. Now, they may have always been online, but there really seems to be a big push by a couple of the major players that not only can you use their software, not only can you go to their locations, but you could in essence, hire a tax professional that they've brought on board to do your tax return. And so I think that that might have something to do with it. The other is who files early, those that are expecting to get dollars back, who are those individuals? Well, those are going to be those that maybe weren't out as much, especially if we look back to 21 and everything that we were dealing with then, or if you even look back into 22. So I think that really where we want to pay attention to these statistics for those of us that are maybe interested in that, we wait till the dust settles. That's usually when I am wanting to take a close look at this. Now, you say, well, then, JJ, why are you even talking about this if you don't think we should be paying attention to it because we should be focused in on tax season? Well, because of really the second statistic that goes along with this, and that is related to the refunds being down, and what I read is by a little over 11%. Now, for those that are trying to get you to maybe read their article, watch their video, that's sensational, isn't it? That's sensational news. Now, don't get me wrong, I don't like it that the refunds are down. I'm like anybody else, and I want my clients to pay their fair share of tax, no more, no less. But if you are a tax professional, you know this, that refunds have less to do, in many times, with the tax law and pretty much everything to do with how much somebody paid in. Now, let me break this down for you real quick, and this is why I'm glad that you're listening to this, because if you have clients that maybe they're seeing in the headlines or maybe they're experiencing it themselves, this would be good for you to basically have some commentary to visit with them about, especially if a few of these items are directly involved in their tax return. So we know that when we talk about the environment today, that we're talking about the 22 tax returns compared to then this time last year when 2021 tax returns were being e-filed. Now, many would probably know some obviouses here, even though I'm going to cover it, but in 21, the child tax credit was much bigger and more expansive on who got included than it was before 21 and what it is back to in 2022. So with those that were the youngest qualifying, they got $3,600 credit, those that could claim those dependents. And for those that then got the $3,000 credit, that was expanded because you could get that as long as you were under age 18. So the credit for a child is $2,000 before 21 and $2,000 per child after 2021. And we went back to the same rules, which is you don't get any more of a child tax credit just because somebody's age 1, 2, 3, or 4. And those that qualify as a dependent that this credit could be taken on, it's back down to only those that are under the age of 17. So right there, so many households have qualifying dependents. And so if the credit is less overall, the credit is less for the youngest of those that are dependents, and the credit is back to including less age groups, well, then, of course, that's going to have a major impact on that refund amount. Also, child care credits, they were way bigger in 2021 compared to before that year and where they are now back to the rules we've always known. See, in 21, more qualified child care expenses could be included in the calculation for starters, and the credit percentage was increased, and some of that credit could be refundable. So we're back down to where we are now, where we got the normal, very much lower limits, not only on the expenses that qualify, but the percentage amount that qualifies, and not looking at that same refundable amount. Also in 21, we know that even if you didn't itemize your deductions, you could take a little bit of a charitable contribution up to $300 per person. So with that being said, also when you look at those that file tax returns and are self-employed, sole proprietors, filing Schedule C. Well, in 21, they still may have had some aftermath related to the pandemic and their numbers being down. So in 22, I bet many small businesses comparatively, their income maybe, hopefully, was up. So I think we're probably looking at that having a direct effect on these refund amount being less this year compared to the prior year. The other thing is we know that the paint hasn't dried really until everybody has e-filed their tax returns, which isn't just April 18th, it's all the way to October 15th. So one of the things that I really would like for you to pay attention to is the most important numbers on a tax return, because many do focus in on what is that refund amount, which is on line 34 of Form 1040. Now, why wouldn't you focus in on that? Well, fellow tax professionals, you probably know, because all that is the end result of the entire tax return. And if there's not a number on line 34, then there's going to be an amount on line 37, which is then the amount that is due. But in my opinion, the most important number on a Form 1040 is taxable income, line 15. So it's the bottom line on page 1 of the Form 1040. See, that's right there the biggest factor of what your tax is. So if overall income was up in 22 compared to income in 21, overall for all citizens, all small businesses, because it's a year that maybe was the most free of pandemic effect compared to 2020 and 21, well, then taxable income as a whole would be more, which means that tax would be higher as a whole, and even all things being equal related to payments being made, withholdings being made of taxes going towards the tax, that can have a major effect then on the overall statistic of where refunds stand. Now, when we are talking about taxable income, this is the number one thing that I look at when I'm trying to maybe help a client figure out, well, why is it that you owe, or why is it that you're getting a refund after now paying attention to their payments. But see, if the taxable income's up, the tax is going to be up. Taxable income is down, you guessed it, the tax is going to be down. So that leads to the second most important number, which is the total tax. So there's a line that you need to look at, line 24. And what is the total tax? Because those two numbers really is what people should be paying attention to. Is the taxable income up, then the tax is going to be up and overall. So the next important line is line 33, which is total payments. See, you as a tax professional, or you that are doing your own tax return, you could do the best job possible and reduce your taxes down by $100,000, meaning you did your tax return, here's your taxable income, and your tax is now $8,000, and before a bunch of planning, it was $108,000. And by proper planning and thinking ahead and tax credits, you got that tax all the way down to $8,000. And you would go, wow, that's great. But if you're not paying attention and all you're focusing in on is, well, did I get a refund? And if not, what do I owe? Then you would probably be disappointed in this example where no one in this example made payments, so nothing was withheld, no estimated tax payments were made. And so on that tax return, even with $100,000 tax savings, with a result of $8,000 in tax, well, on line 37, it would show that they owe $8,000 in taxes. And those that basically are ignorant would then focus in on that. Where I would focus in is, well, what was the taxable income and how was it compared to the prior year? So with that being said, I think the IRS is doing a great job. I love it that they've got more customer support, but I think things are just playing out as normal, as we would expect. So with that being said, we'll see where the dust settles when we hit the end of tax filing season.